Let me welcome then on board Prashant Pitti, the co-founder at easeMyTrip.com, and talk about how their quarter went by. Prashant, hi, good morning. Good to have you on the show. Prashant, I was just looking, through the earnings performance, and given that you derive majority of your revenues from airfare bookings, it's quite surprising that you've managed to deliver the numbers that you have. The operational efficiency has clearly managed to aid your Q4. You've had the highest profitability in FY21. In the fourth quarter, of course, the second wave of the pandemic wasn't quite priced in, but have things changed since?
Well, firstly, thank you for having me on the show. Really appreciate it. Let me talk about the Q4 first, and then I can talk about what has happened after Q4. Well, our company, easeMyTrip.com, has been in the industry for the last 13 years. And of course, this FY21 was the litmus test for any travel company out there. Now, our company has been doing things very differently. We have been bootstrapped all the way till IPO, which is we never raised any money from the investors, and we were predominantly growing via word of mouth, since we do not charge convenience fees to the customers, and because of which the flight tickets come out cheaper. During the entire lockdown period, for the first 2 quarters were almost washed down, right? Quarter 1 and quarter 2. But we saw a very good V-shaped recovery coming in quarter 4. In quarter 4, our GBR, gross booking revenues, was somewhere around 907 crores. Vis-a-vis quarter 4 of FY20, when there wasn't any coronavirus, it was around 1,000 crores. So 1,020 crores. So we basically kind of bounced back by 90%, and that too without much of an international travel. That is the kind of recovery we saw on the basis of that recovery, and we were able to negotiate much better margins and commissions as well from the airlines, hotels, and bus tour operators, because of which our total income shot up by almost 70%, while we had already reduced cost during the pandemic time. We became much more efficient during the pandemic time, and that efficiency continued in quarter 4, because of which we spent only 27 crores in the entire quarter, vis-a-vis the last quarter it was around 35 crores, because of which the profitability went up dramatically.
Okay. Quite interesting. But tell me, how much have gross bookings and the booking volumes been impacted now? And what is your visibility, considering, the vaccination drive is on full throttle, on whether or not the V-shaped recovery that you saw in Q4 can continue now, second quarter onwards or not?
So talking about the first quarter, of course, for the entire tourism industry, it was a little bit lukewarm period, of course, because of the COVID wave 2. Our own travel advisory to our travelers is to travel only when it is necessary, and please follow all safety precautions. That was up until a week ago. The entire industry saw there was a huge, demand which dropped down during the first quarter of this year. However, what we are seeing right now is the current numbers are almost 3 times more than what it was in the early May. So the recovery is coming in very sharply, and we really, really believe that there is this thing called as revenge travel, which is, consumers are done. There's a huge amount of pent-up demand, and consumers are done with the savings what they have made while sitting at home. And to follow the examples of China or US, the travel industry was one of the hardest hit industry. But as more and more people are getting vaccinated, we believe this is going to be the biggest beneficiary as well going forward.
Okay. How are you planning to capitalize on the kind of growth you see for the travel industry and, pandemic and recent trends apart over the next 5 years? Let's say you've talked about a 31 billion number by FY25, 14% CAGR from FY20 levels. So how do you plan to capitalize on the kind of growth that's anticipated?
Absolutely. First, I'll talk a little bit about the industry. The entire industry is growing at a CAGR of around 15% as per the Goldman Sachs report. So definitely we would want to ride on that. And also because of the pandemic, people are relying much more on the online travel agencies like us rather than the offline tour operators, travel agents. So there's definitely going to be a huge tailwind post the pandemic for companies like ours. That's from the industry perspective. From our own company's perspective, see, I'll share some numbers, some figures with you of how our market share has been increasing. So I'll compare ourselves with the industry leader. In FY19, industry leader was 5.6 times bigger than us in terms of selling air segments. All right. In FY20, that number became 4.2 times. And in FY21, that number became 2.7 times. In FY21, they are only 2.7 times bigger than us in terms of selling air segments. So we are clearly catching up, and we are moving towards gaining more and more market share every year.
Okay, fantastic. So that's the kind of trajectory that you're already on. You also stand out because you don't charge a convenience fee, Prashant, and that's one of the USPs. How much has that helped in recent times? How do you then manage or balance that out vis-a-vis other metrics?
So we have been following this strategy since the day one. It's been 13 years, and the results are for all of us to see. The company has been growing, and also to remind you users that we are still bootstrapped. The company actually never took any money. We have grown primarily via internal accruals. Whatever money we earned, we used to put in the company to continue growth of the company. Right now, we are the second largest OTA in India as per the air tickets sold. And, I would thank wholeheartedly to all our customers who have been spreading the word that we don't charge convenience fees, and because of which we are growing. The customers have seen a very steady and very consistent approach from the company that they have used us 3 times, 4 times, 10 times, and every time they have found the same value, which is, and the convenience fees is not a small amount, by the way. It's usually a multiplier of 250 rupees to 300 rupees per passenger. So if 4 passengers are flying, then it's 300 multiplied by 4, 1200 rupees, which you directly save by using the Smart Trip. So we have grown primarily via this plank, where we are seeing convenience fees as a tool to remain viral and retain customer. Our customer repeat transaction rate is 86%, probably highest in the industry. And while our competitors probably are seeing convenience fees as a tool to become profitable one day.
And Prashant, really the proof is in the pudding. At a time when there's a pandemic ravaging the country and the world, the stock since listing, which was in March of 2021, has gained 104%, and in the last 1 month, 123%. So really that's rewarding shareholders. But let's also get in a sense as to what the outlook is in terms of the penetration for affiliated hotel chains and how you're looking at that part of the pool. I know it's not majority of your revenues, but how have things fared on that front?
No, thanks for asking this question. To be honest, we had to do one thing absolutely right before taking on to the other. And the time has come. The company since last 2 or 3 years have been focusing on hotel, trains, buses, and holiday services. To give you an idea, in FY19, our hotel and holiday component in the revenue for the company was mere 2.7%, which jumped in FY20 to 5.4%. For FY21, that number does not seem very high, just because we had to give a lot of discounts in the hotel and holiday category particularly. But you can clearly see the trend of how things are moving up. We are doing various multiple innovative solutions and innovative services by which we want to continue marching forward in the other domain as well. We want EaseMyTrip to be utilized for any kind of travel purposes, whether it is for flight, hotel, bus, travel, and we are innovating in all directions.